The US dollar index is showing mixed performance again. On the one hand, the US currency was boosted by a surge in the services PMI and a drop in the ECB key interest rate. On the other hand, from Tuesday to Thursday, the US issued weak labor market data. The data favored a cut in the benchmark rate, thus intensifying a bearish trend. As a result, the US dollar index stopped near 104 points ahead of the non-farm payrolls. The greenback may close the week with a 1% decline. Now, traders are betting on a 50 basis point cut by the Fed Reserve in 2024. The decision is likely to be taken in September. Let us find out what events will shape traders' sentiment early next week. You are watching Traders Calendar. In the first quarter of 2024, the economy shrank by 0.5% instead of falling by 0.4% as anticipated. This drop was partly due to a 0.7% decrease in domestic consumption. Japanese consumers are cutting back on spending because of a rise in living costs and relatively low wages. Capital expenditures also fell because of a reduced automobile production following Toyota's Daihatsu Motor scandal. This decline impacted export activities, undermining overall economic stability. Given that Japan narrowly avoided a recession late last year, this new GDP decline is a bad sign for the yen. The price index, which is also included in the report, is likely to advance by 3.6%. If Japan's GDP price index continues sliding, it will indicate a slowdown in inflation. Lower prices might force the Bank of Japan to stimulate the economy. Weak inflation worsens growth conditions by reducing investment in incentives. Such a scenario could support the US dollar as investors prefer currencies from countries with a stable inflation. Additionally, low inflation affects the yen's purchasing power, making Japanese goods cheaper abroad and hurting domestic demand. In April 2024, Australia's Business Confidence Index remained steady at 1 point for the second month, which is still below the long-term average. The anticipated zero level signals economic difficulties. The most sluggish economic activity is recorded in the retail, wholesale, and the mining sectors. The situation might boost interest in the more stable currencies, primarily the US dollar. If Australia's economic weakness persists, it could affect international currency markets and support the greenback. On June 11, the United Kingdom will release labor market reports, including unemployment and employment rates as well as wage data. High wages support the economy by boosting consumer demand and could strengthen the pound sterling. However, high wages also drive inflation. The Bank of England will closely monitor the report, while the forecast of a 5.5% wage rise is far from a 2% target. Any decline will be a positive sign for the regulator. However, such a report might lead to a decrease in the pound sterling, thus allowing the US dollar to gain value. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions, and offers are welcomed. We wish you profitable trading and see you soon.